And in business news, in a bid to close the infrastructural gap in the private sector, the federal government invested an estimated 300 billion naira in the sector in 2021. Well, that's according to a statement by the Vice President, Professor Yemi Osinbajo. The Vice President, who made this known at an event in Abuja, disclosed that the government has invested 1 trillion naira seed capital to launch the 15 trillion naira InfraCo project. According to him, the success of the development programs and reforms of the government are largely reliant on the private sector, adding that government is willing to do whatever it takes to support the sector. While the federal government has blamed the current wave of poor power supply experienced in the Federal Capital Territory and other parts of the country on low water levels in the hydropower dams, Minister of Power, Mr. Abubakar Aliyu, made this known to State House correspondents during the weekly media briefing put together by the Presidential Communications team. He explained that the federal government is speeding up efforts on the proposed installation of 10 power transformers, which will be done in tandem with the setting up of 10 additional mobile stations to involve electric supply nationwide. The minister, however, lamented the effects of activities of meter racketeers on the national metering program, assuring that government is working to optimize gas supply to ensure stable power supply. As the price of crude oil continues to rise, on Thursday increasing to $113.06 per barrel as at 5:40 p.m. Nigerian time, the Nigerian Petroleum Investment Management Service, a subsidiary of the Nigerian National Petroleum Company Limited, has projected that the demand for oil will continue to increase till 2050. According to NAPIM's Group General Manager, Mr. Bala Wunti, the products from fossil fuel, particularly the demand for crude oil, will continue to grow, just as the demand of gas is surging towards attaining the Global Energy Transition Agreement. Brent, the crude against which Nigeria's oil is priced, continues to record an increase as the war by Russia and Ukraine intensifies. Two oil-rich countries, Nigeria and Qatar, have forged a relationship to explore opportunities within various sectors and create more jobs opportunities for the citizens. The event serves as a premium platform for conducting fruitful business exchange, which had in attendance representatives from both countries and exhibitionists. More details in this report.
Young Nigerians are on the verge of leaving the country for greener pasture due to economy downturn and insecurity. Other countries are setting up businesses for consumers. The Qatari and Nigerian government have forged a new relationship to explore avenues of mutual growth and partnership opportunities after years of good bilateral relations.
This meeting and deepening bilateral relation is coming reflect the wise of two leadership presented by Sheikh Tamim bin Hamad Al Thani and also His Excellency President Muhammad Bukhari to deep this relation and to bridge the economy bridge between the two countries. And
Qatar is, one of the richest countries in the world, and it's good to tap from their experience to see how they have been able to get there, because we are also an emerging economy.
With over 33% unemployment rate in Nigeria, this new relationship is expected to reduce that number to its barest minimum, while intensifying collaborations between the Nigerian and Qatari business community.
One of the companies here are looking to, invest and start up a manufacturing plant. What that will do, it's going to create jobs for Nigerian youths. It's going to create revenue.
It was an avenue to network, as exhibitionists described the Nigerian market as a solid foundation for building a good business.
Nigeria also, it's a big market and we have a good opportunity to bring our products as well, because the requirement for these bags, packaging bags, it's huge here.
We did not come here to sell a product. We're coming to sell a solution, and that's why we would depend on this matchmaking to see who is the potential.
With sectors like agriculture, oil and gas, mining and infrastructure, this new relationship between Qatar and Nigeria is set to break the cycle of unemployment and further boost both countries' economy. Niolua Popola, TVC News, Lagos.
In other news, stocks extended their losses for the week today as investors piled into government bonds and gold for cover, while scrutinizing the latest twist in Russia's escalating invasion of Ukraine, which included seizing a high nuclear plant. Euro Stoxx index sank 1.4% to 431 points, hitting a new low for the year as the benchmark eyed correction territory. S&P 500 futures and Nasdaq futures were down around 0.5%. MSCI's broadest index of Asian Pacific shares tumbled as much as 1.5%, the lowest level since November 2020, taking the year-to-date losses to 7%. Stock markets across Asia were in the sea of red, with Japan losing 2.2%. South Korea 1.1%, China 0.9%, and Hong Kong 2.5%, while Australian commodities heavy Australian AXJO was down 0.6%. Russian ruble was mixed in volatile Moscow trade early today, gaining against the dollar but falling against the euro as investors assessed conflict signals about the economic and geopolitical outlooks. Overnight ratings agency S&P caught Russia's credit ratings deeper into the junk territory, less than a week after dropping it from investment grade, as international sanctions over the war in Ukraine ramped up chances of a default. The Moscow Exchange's stock section remained largely closed today after a fifth of restrictions imposed by the central bank. In another move to try to stabilize widely fluctuating markets, the Moscow Exchange also imposed a ban on short selling of euro currency and stock instruments. Alphabet Incorporated Google has announced that it has stopped selling online advertising in Russia, a ban that covers search, YouTube, and outside publishing partners. The move by the world's top seller of online ads by revenue follows similar pauses in Russia by Twitter Incorporated and Snap Incorporated after Russian invasion of Ukraine. Google had earlier banned Russian state-funded media from buying or selling ads through its technology, just as it also invoked its sensitive events policy, which bars markets that seeks to take advantage of the war, with an exception for protest or anti-war ads. Russia's communications regulator, Rosoboronexo, on Monday ordered Google to stop showing ads that contain inaccurate information about casualties sustained by Russian forces and Ukrainian civilians. Home sharing platform Airbnb says it is suspending all operations in the Russian and Belarus. The company's CEO and co-founder, Brian Chesky, who made the announcement earlier today, explains that the company will continue to boycott Russia following its invasion of Ukraine. The move may not have a significant impact of Airbnb's bottom line, particularly as the vast majority of airlines have stopped flying to Russia in recent days. On Monday, Airbnb says it was going to offer free temporary housing for up to 100,000 refugees free in Ukraine, and adding that it will fund these stays with the help of from Abrams, hosts, and donations from the .org Refugees Fund. With oil prices still above $111 a barrel today in a volatile session, as fears over disruptions to Russia oil exports in the face of Western sanctions offset the prospect of more Iranian supplies in the event of a nuclear deal with Tehran. U.S. West Texas Intermediate crude rose by 1.93% to sell at $109.08 per barrel after reaching an all-time high. Brent crude futures is also down, rose 1.46% to sell at $112.01 per barrel. Bonnie Light witnessed an increase of 2.61% to sell at $114.07 per barrel. OPEC basket also recorded an increase of 8% to sell at $112.02 per barrel.